Next on stage, the Agora goes digital, instant payments as a catalyst for Greek SME growth. Moderating the discussion, Iliana Angelakis, head of Treasury at OKTO. Joining her on stage, George Syntelis, CEO at Everypay, Konstantinos Akrivos, CFO at eFood, Olympia Kritsotaki, head of Transaction Banking Solutions in Corporate and Investment Banking at Eurobank, and Dr. Anastasia Mallerou, Financial Services and Fintech Lawyer at Bernitsa law firm. Please welcome our moderator and speakers.
Hello, everyone. I'm very happy and proud to be here today with you. This panel is here to discuss about the recent developments in the payments landscape in EU and in Greece. Europe is strongly encouraging the adoption of instant payments and is optimizing the efficiency of the European payments. In Greece, IRIS is transforming payments by enabling instant account-to-account transfers. The goal is to make it more accessible and more affordable, both for individuals and businesses. I'm delighted to present to you our panel of experts to discuss more about the instant payments landscape and how their implementation supports SME growth. I'm going to start from Olympia Kritsotaki, Head of Transaction Banking Solutions, Transaction Banking in Eurobank. Olympia, how can instant payments reshape the financial landscape for SMEs in Greece?
Thank you, Iliana. Good evening to all. It is always a pleasure to be here in this event. I really like this topic because it reflects what is coming in the area of payments. Note what instant payment is. Instant payment is a 24/7 credit transfer delivered to the beneficiary within 10 seconds. Count up to 10 and you have your money available in your account. That's what instant payment is. Moreover, instant payment is something that is or will be the new normal. Consider this. Here in Greece, we have, Iliana already mentioned it, IRIS, real-time instant payments addressed to both individual and business, and this will expand soon. Moreover, instant payments expansion is something that will go on. Consider this. Instant payments will be available through all channels, e-banking and banking branch, and with the same cost, no additional cost, as for the normal payments. And moreover, in order to have more trust in the payment system and to support the payments, the EPC, the European Payments Council, has introduced, starting from October 2025, the VOP. What is the VOP? It's a verification of payee mechanism with common guidelines, common rule for all banks in the Eurozone. Many of you in the break, we discussed a little bit about VOP because it's something that's coming for all transactions, credit and instant transactions. But how this all affects business growth? That was the question after all, how this reshapes the business growth. It improves cash flow. You have your money available in 10 seconds. You can pay your suppliers, you can pay your staff. No extra cost. The same cost for instant payments, the same cost for normal. A reduced time to reconciliation. You receive the payment immediately. You maybe have to do some adjustment at the beginning, but at the end, this will reduce time to reconciliation. 24/7 availability of funds. Of course, for every opportunity, there is challenge. For example, the VOP, as I mentioned, we have to educate ourselves and our customers on how to do it. In Eurobank, we have a webinar for that, but all the system will have some actions regarding education. So every opportunity has challenges. We have to make this work.
Thanks very much, Olympia. New things coming our way. George Syntelis, CEO of Everypay. I would like to ask you, what opportunities and challenges do you see in scaling adoption of instant payments?
First of all, thank you very much indeed for the invitation, seems like a great gathering. Now, I think in terms of opportunities, the opportunities are quite massive. I'll get into what are the opportunities, but I will start with some of the challenges first, beginning with the fact that the European Payments Council has provided the industry with rails, which has then enabled other participants, one being Iris, other being other national schemes from European countries, to build on top of that A2A, instant A2A schemes. But that journey has been quite bumpy. And if we take other examples, like the Brazilian case, for example, it was a spectacular success in terms of adoption. They had a major fraud case recently. So it's not easy. What we're building here together with Iris and with the European Payments Council is exceptionally high-tech. And you are building out this exceptionally complex high-tech, which then appends the way with which we've been conducting business. So with the way with which we've been doing reconciliation changes, liquidity management changes, fraud management changes. So all of these areas require careful thinking. And I guess my 2 cents from what's going on in the industry now is that not necessarily all that careful thinking has been put in place because the endeavor is very complex and because it is a cross-market effort. So what we've been seeing is that as we go along testing with the rest of the market, we're identifying gaps, issues, problems that we have to change. Now, I'm actually quite confident that all of these challenges will be addressed. And when we do address all of these challenges, you mentioned the deadline, so it's coming up very soon, we should be able to deliver to the market a fantastic service, okay? And if that fantastic service is not only a game changer for, entities like perhaps an end consumer, but it's also a game changer for corporates, like the way we manage treasury changes, the way you can consider liquidity changes. Now, we're an EMI, we process billions every year, all of that goes through our treasury for payouts. And if you put in what does instant mean, it means appending the way we do stuff quite dramatically. In a good way, it forces everyone to do things faster, better, and more efficient. And I guess the last thing that I would say in terms of scaling up adoption is making sure that we all adhere to what Olympia said before in terms of regulatory compliance, making sure that we all have a level playing field. In other words, we offer this service at the same cost for everyone. We don't exploit this, and we see this genuinely as an opportunity for growth. Now, personally, I'm quite hopeful for what this brings to the market.
Well, I think that we all know that payments is not just about infrastructure anymore. They're a driver of growth. Well, thanks. Konstantine, nice to have you here. Konstantinos Akrivos is the CFO of eFood, and I would like to ask you your view of how is the evolution of the payments ecosystem and the increasing importance of SMEs within it shaping day-to-day operations.
Thank you very much for the invitation and the event. I will speak on behalf of the companies, let's say, just to give a bit of the overview of how we feel about it, because it's actually in the center of our operations. Imagine a platform is not just a company in its own, it's an ecosystem. So it's an ecosystem of its vendors, of its customers. It's an ecosystem of its users who are daily transacting. And in our case, it's also an ecosystem of the riders. So all these have a massive volume of transactions. In our case, volumes in terms of quantity, but at the same time, low value. And the whole idea is how you manage to accommodate this and how you make things simpler for the operations for the users, the operations for the vendors, and the riders themselves. So regulations like this is obviously more than welcome in the sense that this is where we're aiming. This is what we can envision how things should go and how things should be in the years to follow. This is obviously the road. Nevertheless, it's not that easy. Take into consideration that platforms, at the same time, along with their main core operations, they're adopting fintech products. So they're making things even more complex. They're adopting wallets. They're adopting, they're financing, microfinancing vendors. They're even providing buy now, pay later, let's say, options to the users. So having all this in mind and setting a kind of flows of money and information, which is quite multi-vertical, complex, and you need to somehow reconcile all this. Imagine how difficult it is to address it and how difficult it is to accommodate. What this means for a platform and what it means for a treasury, let's say, within the platform, obviously this is not something that you can do manually. And at the same time, I can tell you that even platforms, not even, let's say, even more sophisticated institutions are not ready to accommodate the changes that are happening day to day. So if I could somehow, let's say, drill down and say that what are the two main things which I think can help you navigate through this environment. First of all, is technology. It's tools that you need to have within the team so that you can manage, to address all these daily tasks. In the case of a platform, take into account that there is also kind of the platform itself, which is a major database of how things are working. And the other thing I would say is process. It's in the case of eFood or any platform, think that these are not our own funds. We're part of the ecosystem, but we need to accommodate, facilitate. It's not that we are utilizing our own funds. So from a CFO's perspective, better safe than sorry, let's say. So, you need to be like, make sure that, things are moving and are moving in a quite safe environment. Summarizing, I would say that, this is how things should work. I think we have quite a few steps, to go through up to that point. But if I could, going back when we started eFood, like 12 years back, and where we are now, where we're heading, I would say that ideally at some point, what we'd like to see is I would like to see that the moment that I'm buying something from a eFood or platform, at the same time, the vendor is being paid, the rider is being paid for his service, and so on and so forth.
A rather complex problem to solve. Thanks very much. Coming back to you, Olympia, what benefits do you see that this brings for SMEs in terms of efficiency and cost?
Okay. I'm not a treasurer, but we work with treasurers in transaction banking. So I would guess that this new era has benefits in 3 areas of your business: account receivables, payments, supplier stuff, whatever, and liquidity. You will have the chance for better financial planning. In terms of cost, as I said before, there is no extra cost. Instant payment, 24/7 money available without an extra cost to normal payments. It's the same cost, no additional cost for your company. And more or less, you will find it in the meantime that you will reduce time to reconcile. Maybe at the beginning you have to do some adjustment, but at the end you will have more time to focus on your business initiative and the business growth of your company. Finally, because the money will be available 24/7, you will have probably less need for financial lending. So all of this provides the benefits in the new era of the payments.
Thanks very much. Very good news for the Treasury community and the people in the room. I'll move on and focus a bit on technology. So, George, I'll come back to you. And I would like to ask you, what do you think, what role does technology play in driving the adoption of instant payments?
Thanks for the question. It's actually a very interesting topic because technology is pivotal in terms of driving adoption. I will actually connect my thoughts with what Konstantinos was saying around the role of platforms, particularly given our experience as Everypay, because we specialize on servicing platforms, companies like Scrooge, large marketplaces. So what we see is that you need to combine a couple of things, right? One is to partner with these entities that are building up these ecosystems, and then embed essentially your flow in terms of technology on every single aspect of this. That means, it may look like a simple thing. from a user perspective, but then you'll have to tackle a number of different categories, like card present, card not present. Within card present, you have various flavors. So there's all sorts of stuff that needs to happen. And by the way, it all needs to be in some shape or form backwards compatible. So, so essentially, from our perspective, technology itself is the only way in which you can do this, right? And when you accelerate with instant payments, in addition to accelerating the experience, you accelerate a whole bunch of other stuff, right? For example, you are also accelerating fraud, right? So at the same time of accelerating payments and improving, capital management in, banks and corporates, we're also having to double down on what does it mean to get significantly more attacks and more attempts. What does it mean for us trying to recover funds that we're safeguarding if they've flown out the window within 10 seconds? So these are some of the challenges that I'm personally quite happy that we now have the tools and processes to tackle. If we see what can happen with these examples, so I guess we can look at some other countries in our neighborhood that have progressed a little bit more than us in this journey, right? So, for example, I don't know how many of the group have been in Holland recently. They use a system called Ideal. Adoption rates are, north of 70% of electronic transactions. So significantly more A2A compared to card. That was not the case 5 years ago. Again, if we go in Poland, we had the same process. And then if you see the way they did this was by investing on technology across the various aspects, authorization, capture, settlement, fraud management, the whole shebang. So it's complicated, but the nice thing is that we now have the tools to deal with all of these challenges, either as standalone companies, or I think what's more intriguing is, and more interesting, by assisting platforms that act as magnifiers for the rest of the market to adopt the new methods of payment.
Thanks very much, George. So as we all know, adoption of new technology always comes with legal and regulatory concerns. And to discuss about this, we have here with us Anastasia Mallerou, Financial Services and Fintech Lawyer at Bernitsa's law firm. Natasha, can you elaborate on EU and Greek legal framework background on the instant payments?
Yes, thank you, Iliana, for the question, and thank you to HAT for the opportunity of being here once more. It's always a pleasure. Well, what I find interesting about instant payment regulation is that it is not anymore, it's not as innovative as most of us would think, as it goes back to 2014, when the EPC, the European Payments Council, was instructed by the ECB to set up a system, a payment scheme, adjusted to credit transfer for instant payments. And the SEPA instant payment, as it is called, was really indeed launched in 2017. So it's quite
some time.
Quite some time now. Now, this was an initiative of the bank industry, the banking industry, but at the time it was not, adoption was rather slow. And the EU Commission wanted something more, because we should always keep in mind that payments, including credit transfers, including instant payments, these are all at the heart, at the core of European unification, monetary unification. So you need, as you said, I think George said, a level playing field, same rules for payments within the member states and cross-border and so on. So really the Commission had an interest in that. And since adoption was slow from the market, the Commission stepped in 2020 with a proposal of the IPR, the Instant Payment Regulation, which of course took a while, and finally was adopted last year. Now, of course, the regulation we know is directly applicable to all member states, and the IPR focuses on the payment service providers, in that it imposes the obligation. There are some nuances there, but as a rule, it imposes the obligation to PSPs, to payment service providers, who accept it at the time or accept and send credit transfer to do the same with instant payments. So it focuses on the financial market participants. Now, of course, this is not obligatory on the other market participants, okay? And this is why we have seen a big fluctuation among member states and a differentiation among member states. In Greece, we had last year a law which imposed the use of IRIS on professionals, imposed the acceptance of instant payments. So all lawyers, engineers, and so on are obliged to accept instant payments. And earlier this year, the new capital markets law imposed the same obligation to all legal persons who transact with customers who are consumers. Therefore, all legal persons from the end of October, that is in less than 10 months, must offer to their clientele the possibility to use instant payments. In Greece, it's only the IRIS system or IRIS. So there you see that this is more or less the evolution in a nutshell. There are some gray areas there. We have discussed this, will it be obligatory for platforms, for example? There are some gray areas. There are other technicalities. I won't go into that. In a nutshell, that's the evolution of the framework, of the legal framework.
Thanks very much, Natasha.
Thank you,
for
Iliana.
the lesson, for the history lesson. Konstantine, in respect of risk, now in the adoption of new technologies, what are the main risks that platforms should be aware of when adopting these new innovative means of payment?
Well, in every new thing, there's always kind of risk. So I would say that, up to now, if you go back a bit in history and you see how platforms evolved, initially, we were collecting from customers because, the substantial part of our transactions was in cash. At some point, we transitioned gradually to cards. So, we've started introducing new weapons, let's say, which at the end of the day are supplementary to the main business. It's not like we're not trying to replace Everypay's business or another e-money institution. We're just trying to add on our existing portfolio of offering to our users some additional services. This is the whole idea about it. What are the risks? I think, first of all, there's a main risk. It's not your own funds. So, you need to address this in a concrete way. Even if you do a marketplace business or you generally, you're intermediate in something, you need to realize, your financial performance, and you need to understand, what's yours and what's not yours. So this is, in anything. I think in terms of payments, I don't see any specific kind of, additional risk to the ones we've already, let's say, faced through the years. I think what makes the risk higher in terms of our business is the complexity of the transactions. It's from an outsider, it seems that, if food is just delivering, let's say, food. It's not exactly like this in terms of, if you break down things into all the components, it's not that easy to reconcile. And the second thing for me is the payout side. Is you need to realize when you're a platform, you're actually addressing, facilitating an ecosystem. Imagine what can go wrong if, for example, if food pays out wrongly, 22,000 vendors which are operating in the food industry day to day. So it's not, so having said that, I'm saying that, these are the same risk apply as in any other company. What is of major difference is that you need to be 2 times cautious on how when you pay out and when you give to the beneficiaries the money. And if I may add another point here in terms of, that I think it's, for us, it's of major, let's say, concern, but it's not directly related to the question, is is in terms of regulation, in terms of how regulators perceive platforms. My main point to the whole discussion going on is that platforms have reshaped and will be part of the next day ecosystem. This is at least how things are moving at this point. I cannot predict the future in 15 years' time, but it seems going to be part of the game. And I think accordingly, regulators need to really, step down, understand what, how things are working, so that the regulations that are coming for implementation are also, let's say, adjusting to what's actually happening in life.
Of course. Thanks very much, Konstantine. I would like to go back a bit to law and to regulation. Natasha, can you tell us how can a regulatory framework support innovation while ensuring trust and safety?
That's a good question, Iliana, and the question itself reflects the main challenge that there is for regulators. We all know, of course, that technology runs fast and that regulators always come after that and try to catch all developments, which is not a possibility. When you pass a law, you want a law that will be stable, that will last for some time. And of course, the regulator cannot know in advance what may come up. So it's a big challenge to find the balance of dealing with the main risks, fraud, like you said before, money laundering, consumer protection, financial market protection, and so on. And on the other hand, not to be too restrictive and create stop innovation or stop the progress. So the question is about balance. In the European Union, we have had and we have many pieces of legislation that I would say are emblematic in that they have set the tone. Many times they have set the tone for regulation in other jurisdictions. Going back, we can mention the GDPR for the protection of data protection. Concerning technology and expansion of the internet, cybersecurity is being regulated. We have the Network and Information Systems directives. We have the Digital Operation Act for the financial sector, and so on. Recently, we had the Artificial Intelligence Act, and the AML, of course, legislation that is always being updated. Lately, again, we had the market in crypto assets regulation, which that was one of the first, and if not the first, globally regulation to capture some of the issues posed by the use of cryptocurrencies, and the provision of crypto services. So there is all this legal nexus, but which we should mention, and I guess you all know it better than I do, that sometimes imposes a burden that might be disproportionate on business. So sometimes the cost of compliance and all the requirements for compliance may themselves impede to a certain degree innovation itself. But the market adapts, of course, and it comes back again to the regulator and as well to the authorities, to the supervisory authorities, and if we go a bit further, to judicial authorities on how they implement. So there is a big challenge there. There is always a need to balancing and keep balancing, so it's not easy, but it's doable.
So the key word here is balance between regulation and...
The key word is balance. Allow innovation, try to foresee what will come up, have a regulation that will be, as we say, technologically neutral, so that it won't lead to one provider or to another provider, that will not lead to one technological solution versus the other, but so therefore allow competition, allow innovation, but protect human rights, protect consumer rights, protect financial markets, and so on. There are many things to protect. So yes, the challenge is to find the right balance.
Thank you very much,
Thank you,
Natasha.
Iliana.
So thank you all our panelists for sharing your insights and for all of you joining the discussion. Instant payments clearly open new opportunities for SMEs, but they also bring challenges, as we discussed, in regulation, in technology, and in risk management. So moving forward now, we need to question and ask how we can balance speed of adoption with trust and innovation with inclusion. So let's see how the future of payments is shaped.
Great, thank you, Iliana.
Thank you.
Thank you.